Oops, sorry, I think. So let me just repeat quickly. So we are just covering the overview of technical analysis. Unfortunately, for the last 20 minutes, we did not manage to record. So in case for those who did not attend the lecture, you are watching the recording, please read the slides. We were just going through the slides, and we have not really talked about technical analysis per se, right? So do not worry if you miss or did not catch the recording. So there's some tools that we can use for technical analysis. We use some charts, trends, and chart patterns. Okay. Okay, so now we are going to really kickstart doing technical analysis. So we look at some stock movement first, right? So we have the primary, the secondary, and the ripple, which is the shortest term, right? So there are quite a lot of words here, but we are just going to see one diagram, and this will make immediate sense, right? And then we will not really go through the words because it's just more about understanding. So the whole idea of a primary trend is actually what is happening in the long run, right? So you can see from this diagram immediately that in the long run, the price is going down, right? So it is a long run kind of price movement. However, in between them, there can be some secondary trend movement that is smaller. For example, we see some small little trends going up here, and there's some even smaller trend which is in shorter period, such as ripples that we can see here, right? Minor trends that's fluctuating on a daily basis. So these are some various trends. So there's a primary, a secondary, and some ripples that's happening here and there. So even like we were talking about the fall in the stock price or the stock market. We do not know where is it falling from, right? Let's just assume that the fall starts here, right? Here. So the thing is, as it falls, we do not know that it will stop here or will it continue falling like this. So that's the tricky part about they call it catching a falling knife, right? So when you know that the knife has actually fallen into your hand. You do not know until on hindsight, you'll kind of figure out that, hey, actually, at this point here, maybe this is the lowest point in the market. So that's the problem now. So I think if you guys have some spare cash and looking to invest, like I mentioned, S&P 500 might be a good time, might be a good way to invest. But at the same time, you don't know when it's opportune time to enter the market. However, you can use daily cost averaging, which is a investment technique that most people use to invest. Yes, so daily cost averaging, that one, I think most people would have heard of it, or maybe many of y'all who are working full time and doing this as a part-time thing might already start doing it, right? Like every month you put in $300, as overtime you save on your Starbucks and your expensive coffee and take that $6 and put it in S&P 500. If you watch those TikTok reels on investment, they probably tell you to do that. But yeah, that's not financial advice. So do not listen to what I say, and please do your own research before investing your money. Okay. Okay. There are some line charts as well. So continuous line represents the closing price at different time. So this shows you the different pricing, right? The pricing like this, and then the bottom provides you some more volume related information. Of course, this kind of line graph, most people don't really use this. This is even in your app like Moomoo or Tiger Trade, this is usually just a small little part, like you have your price XX, and then here they usually have this graph like this, and then your ticker maybe VOO, something like that, and this is a graph, right? So typically this kind of line graph represents your daily fluctuation. So your graph will start off as start of the trading time, it will just be like this, and then it will keep on accumulating and go over the period of time. So they are more just to look at what's the trend for that um, day. But then nowadays people use more sophisticated things like this thing called bar chart. So a bar chart is like a line graph, but then it shows you what is the highest and lowest price using the bars here, highest and lowest, like this, highest and the lowest, and then what is the opening price and closing price. All right. However, this chart is good, but most people are now not even using this bar chart. They are using the candlestick because this one shows you the direction of movement within the day, the day, right? Meaning what? If within the day, the opening, so let me show you, opening is more than closing, meaning what? There's an increase in the stock price. The candlestick becomes green, right? And if the opening is less than the closing, the candlesticks become red. So the candlestick is like the bar chart, but it shows you even more information because it shows you which direction we are going, whether is it increasing or decreasing. And a candlestick is never just one point like this, like just one candlestick. It's always multiple candlestick, as you can see here, right? So we know that in this portion, the candlestick is green, meaning the opening price is less than the closing price. At the same time, within the day, we can see some tails of the candlestick showing that there is quite a bit of fluctuation in terms of price. Let's look at this. Can you see this red one? The fluctuation is so much within here is so much, right? Compared to the actual closing and opening, which is just so minor. Okay. Um, yeah, so this really is more to teach you how to read the candlestick in case you do your own trading after this short introduction, you know, oh, okay, candlestick is like this, green means what, red means what, right? At the same time, using candlestick, we can also find out what is the primary trend, like we have mentioned, secondary trend, or um, ripples, right? So, for example, these are secondary trends, right? There's some ripple that's happening here, going down, some ripples. These are like secondary trends like this. Overall, the primary trends are also upwards. Okay, in terms of patterns, we can determine also what is the resistance and support. So, if you watch things like Bloomberg News, or if you have access to Refinitiv and you do read uh, those reports from either brokers or traders, you'll see them using terms like what's a resistance, what's a support. So let's just try to understand a little more so you understand what you're reading. So in terms of support, like what it's trying to say is supporting the bottom price. So it's the price below the current market price, which you should buy, which buying interest should be able to overcome selling pressure. But in layman terms, what this means is this, right? So sometimes it's this can be quite difficult to understand, like all these words. But in layman terms, it's this, right? Support is the bottom here. Is the bottom here, right? Meaning what? That whenever the price fall all the way here, it will not be able to breach this support level because the price is so low and buying starts to occur, driving the price up again, right? So that's the support. Now, as the price of the item or the stock is being driven up, there is some resistance happening here because at a certain level of the price, this is a bit too much, right? People say, hey, this is not worthy to buy already. It's too expensive. So people start selling it. It's good time to sell because it's so expensive. Good time to sell, right? And then it drops again. So the the resistance here is the one that is on the top. It resists any further price movement upwards, and your support is at the bottom, which prevents the price to dip even lower. So the resistance and support can be breached, and the new support might become the resistance, right? So let's look at what I say. If the price pierces the resistance level and continue above the level, right, it is now considered the new range, uh, and the original resistance become the support, right? Vice versa, the support, if it pierces through, will become the resistance. So if the price cuts below the support, so this is the support now. If it cuts below the support here, then this means a different color. This thing now becomes the resistance. So sell if the supports break down, right? If it keeps going down, you should sell uh because it signifies that buyer no longer overpowers the seller. So when there's a breakdown in the support, generally is considered a bearish signal. Similarly, if there's a breakdown in the resistance, then it's considered a bullish signal. We have some continuation patterns here. So a continuation pattern, it means that the pattern keep on continuing in this direction, right? And what does this mean? So why is it called ascending triangle? So ascending triangle, we see that, can you see the slope of this triangle is going upwards? So it's a slope like this, so it's going upwards, meaning what? The stock price keep on going upwards based on this ascending triangle like this, keep on going up, with the top of the triangle appearing flat. So yes, it might appear flat like this, but in reality, your price is actually keep on going up. That's why it's ascending upwards. So in ascending triangle, because it's bullish, is very good. On the flip side, we have a descending triangle, which is a continuation pattern, meaning it keep on doing down. You keep on descending this way in a slope like this. So you keep on going down, like this. Any questions so far? So all these are just for your own information. Like I mentioned earlier, there is a lot of technical analysis, trends and patterns that you can use, and it's almost infinite. So our purpose of this module or this part of the module is just to introduce you this concept of technical analysis, but we're not doing a full-scale technical analysis course. At the same time, you also realize that for most of you all who have started an ECA, know your technical analysis is not part of your assessment. However, it is good to still know how to do it, or still know some idea in case if you do an internship. Some of you might be traders in internship, so you still need to know some information on this. In terms of symmetrical triangles, basically your triangles are sloping symmetrically like this, and so this means that the price increase and decrease of at almost equal proportion all the way. This shows an indecision within the buyer and seller in the market, and eventually there might be an explosion of this trend out. So whether it can be exploding upwards, which is a bullish symmetrical triangle, or it can explode downwards, as you can see here, which is a bearish symmetrical triangle. There are further other continuation patterns as well. So it's a flat and pennant. Usually represents kind of a sudden brief pause in terms of the market, and a bullish flat kind of characterized by a lower top. So here is lower, So lower top and the lower bottom, can you see that is tilting downwards, which goes against the trend, even though the general trend is an upwards trend. For a bearish flag, it comprises of a higher top here. It starts at a high, and then at the bottom, it goes against the trend by going upwards, even though it has deep, but it goes upwards. But eventually, it gives way and just crash downwards. So another tenets that we can look at is the symmetrical triangle, where you start off with a low. For bullish one, we look at a lower that spikes upwards, but this time, instead of slanting down or slanting up like a ascending or descending triangle, we are just going symmetrical like this, and eventually it cuts up if it's bullish, and it cuts down if it's bearish. We have some reversal patterns as well. So reversal patterns, how we can see is that it moves in one direction, but eventually the pattern reverses at the end, right? So reversal pattern occurs at the end of the trend. So it reverses. What does this mean? Double top. So what's a double top? It shows that before the end of the double top, overall, we can see that there's a primary increasing trend. However, in a reversal pattern, once we have hit the double top at here, it crashes down like this, right? So the pattern reverses. On the flip side, we have a double bottom. A double bottom happens where the primary trend at the start before the double bottom is a downwards trend. However, given this is a reversal, so once you spot a double bottom here like this, where there's high volume, with greater volume in the second peak than the first peak, so there's some conditions, then chances are the trend after it will be higher. It will go upwards, right? So this reversal pattern, right, is useful to the extent that if you're a trader, once you notice a double bottom like this, you know that if you're very experienced, you can say that, okay, now the price is going to increase. I will buy at this angle here, greater volume at second peak, which is here, second pick here, and then you buy here so that you can get the price increase, right? So reversal patterns are really quite good in the sense that if you are very skillful in it, you can actually make some quite good money. Anyone does trading here, like personal trading, like day trading? All very prudent and investing in S&P 500 5-year horizon. Okay, all quite prudent. um, Yeah, so previously, in university, I have a couple of friends that does day trading. Like they study in the day, like like you and me study in the day, and then they trade in the US market at night. So yeah, they do it full time. So much so that they can pay for their tuition, and more, and all the luxurious stuff. So if you are a very good night trader and a part-time night trader, you can really make quite a bit of money. Yeah. They see them going on fancy trips. That's like, how do you get the money? It's like, oh, they do night trading and they study in the day. So potentially, if all these kind of patterns interest you, something you can consider, because it takes uh, time to study the trends and effort as well. Uh, we talked about double top earlier. We have a triple top as well. Same thing. Once we hit the triple top here, once we are hit at triple top, then it will go downward. So these are bearish kind of signal that we have seen here. These are reversal patterns. What's interesting also, there is this thing called a head and shoulder. So it's a bit more sophisticated to the extent that we try to determine four distinct parts of this head and shoulder: the left shoulder, the head, the right shoulder, and the neckline. Right? There are four parts, and we'll see this in the next slide. Okay, so where's the head and shoulder? So we start off the left shoulder. So what happened is that we have this left shoulder where there is a high volume rally, followed by a minor reaction with less significant volume. So there is a rally up like this, very high volume, and then there is a downwards revision here with less volume. Okay, then we enter the head, which is another high volume rally, reaching the highest point. So highest point is the head here, right? And then followed by a lower volume reduction that hits to the bottom. And then the third shoulder is the right shoulder is now again a rally, but less volume again, eventually going downwards, right? So once we determine what's the left and right shoulder, this is where we can determine where's the neckline. So it's a decline in price from the top of the right shoulder, which falls below the line forming, connecting the bottom of left shoulder to the head, at least 2 or 3% of the market. So this is the neckline here. This is one example of the reversal pattern. The left shoulder, right shoulder, inverse head and shoulder as well, where it is the inverse trend heading downwards. Okay. Then we have this thing called RSI, so relative strength indicator. So, I think some of y'all have mentioned that you are doing your CFA. So your CFA have a lot more details on technical analysis, including how to do the calculations of RSI. So the thing is, technical analysis is not that easy to the extent of what we have covered so far. It can get very mathematical, right? And one of the example is calculating RSI. So if you do take a CFA, that is a topic that you have to study on your own because we will not be covering it. I think the school decided that is a bit above and beyond the syllabus. So we'll just kind of understand what's RSI, right? So relative strength indicator. So we were given this convention where overbought scenario happens when RSI approaches level 70. So here, then your question is, how do you know what 70? This is where you need to do the calculation. But fortunately, I would say for you, you don't need to know how to do a calculation, right? So when it reaches the level of 70, it means that it's getting overvalued and it's a good candidate for pullback, meaning that you can try to sell it. For oversold situation is where it dips or below 30, indicates that the asset is getting oversold and therefore undervalued, which means that it has been at the lowest and it's time to buy. So if you notice, right, at certain points at this overbought scenario, this corresponds to the peak price, right? So this is actual stock price. So can you see using the RSI, you can kind of determine when it's time to sell because the price going deep here. And using RSI, you can determine when is the time to buy. So, nowadays, if you use market intelligence tools such as Bloomberg, you no longer really need to calculate RSI. It's given to you. It's just an option that you just click, and then they come up with a graph below like this, and then tell you what's the RSI, right? So a lot of information now is given to you, but it's really how you use it. And I would like to cover more about this in more of the fundamental analysis then later when we talk about the GDA. Uh, okay, then we have this other thing called MACD. Also, another uh, indicator that generally you will actually need to know how to calculate if you are taking a CFA. Need to learn how to calculate, but in this um, simple introduction, we will not be focusing on calculation of the MACD. However, the general trend is this, right? It's a momentum indicator. So it indicates what's the momentum or the price movement of two average price. So right, so normally we compare with two values, and we'll see this in just a bit, the next slide. So the most popular formula is the difference between the 26 days and 12 days exponential moving averages. Usually a 9-day exponential moving average of MACD is plot as a trigger line. So you'll see that you'll see a trigger line, and there is a bullish uh, cross over a curve when the MACD move above the 9 days exponential, and bearish when it cross below the 9 days exponential moving average. So what does it all mean? Let's look at the graph here. So we have our 9-day moving average here, which is this line, this very smooth line here. So when we have the difference in 12 and 26 days, so which is this line here, this one difference in 12 and 26. So when this line cuts on the bottom here, this corresponds to a bullish signal to buy, right? So I refer back to the slide here. The bullish crossover occurs when MACD move above the 9 days exponential. So can you see that your MACD is above your, at this point here, let me just highlight, at this point here, it moves above your 9 days exponential. And by doing so, gives you a bullish signal. At the same time, when your MACD, right, your MACD cuts below your exponential moving average at this point here, it gives you a bearish signal. Why? Because at this point, the price would decrease. Okay. So again, we are comparing the MACD with the 9-period signal line. So the MACD given by the 12-period exponential moving average minus the 26 period, and then the 9 period compared with the signal line based on the 9 period, right? So I know this is very brief in a sense. So your question, oh, how do you do, what's the 12 period, what's the 26 period? Why use 26? Why not 25? Right? So all these details are really in the calculations. And the thing is, if you are very interested, you can Google and search, but it will be it's out of the syllabus for our module. So last but not least, like I mentioned, this lecture 5 is quite short. So there's just some comparison between fundamental and technical analysis, right? And we want to focus on the technical analysis because this is what we're talking about, given that we already assume you know what's fundamental, right? So in a sense, technical analysis, we want to estimate how price change the next day, where price change is important. This is very unlike fundamental analysis where we are focusing on searching for undervalued stocks, right? We buy undervalued stocks, but technical analysis, we are looking at price changes. So we are trying to predict how will the price change tomorrow. Volume trade is considered very important. Only high volume trades are worth considering. If there's low volume, no point. Um, on the fundamental side, we are actually focusing on cost of capital, cost of equity. So what is the cost involved? For profit, investors make money based on the price changes. This is determining over and undervalued stock. The period generally more longer term. Like some of you all say you're investing 5 years horizon, so chances are you're going to fundamental. Technical analysis can be as short as a few hours. Fundamental analysis, we look at all information. That's why there's a strong emphasis, lecture one on economy, industry, and company, i.e., top-down approach. Uh, while technical analysis just look at price and volume. Issues, of course, we need to make some uh, justifiable assumptions. I'll put a star here. I want to talk about this later in the GPA. We need to consider assumptions and we need to specify them in order to estimate, your terminal value, your growth, etc. Um, and for technical analysis, we just need to choose what's the right strategy to use. And what is the right strategy really depends on your experience of technical analysis. Okay, so like I mentioned, very short uh, uh, module. Congratulations, everybody, for surviving this course. You're officially done with the content of this course. Give yourself a pat on the back. So congratulations on completing it. Um, so we have a lot of time. Obviously, we should not waste that. So no, let's do this. We're going to take a break. So let's just take a 8 minutes break. So we come at 8 o'clock. At 8 o'clock, we will go through the GBA. So I really encourage you. So earlier I mentioned this, but I know not many have arrived yet, and the lecture was not recorded. So I'm going to repeat this again. So today's lecture, we have already covered the slide materials. That's part one. Part two, we are going to cover the GBA, and we'll try to cover this in more in detail in the sense that we'll go through some key misconceptions and same time see where are the common mistakes. Like I mentioned earlier, for those who are not here, unfortunately, I wanted to release the results today prior to this lecture, but the school has not approved the grades yet, so I cannot release it. But rest assured, the grades will be released by Sunday, right? So your GBA grades will be released by Sunday, and your class participation grades will be released by Sunday as well, so that you are able to know your overall OCAS grade. And like what I mentioned earlier as well, sorry for those that came earlier, but I'm just repeating this, that you can be quite strategic in terms of amount of effort you put on your ECA, given that many of you all are working and studying as well as taking multiple modules. So be strategic in terms of how much effort you want to put into your ECA for the grades that you want to get, right? So if let's say a B plus is good enough, put in a B plus effort, right? You need not put in too much effort because you have to put in effort for other modules as well. Okay. All right. So let's take a break. Let's come back around, let's say 8:02, and then we'll move on to discuss the GBA and encourage you to ask some questions if you do have some. Welcome back. How's everyone doing? Happy that guys happy that the module is almost ending soon. Yes, good. Okay, that's good. Uh, okay, maybe before this, any questions on the module first, or like what we have covered so far before we go into this GBA? Any questions, general questions, maybe even not relating to this module, things that you are curious about? I guess if you do have questions, you can ask along the way. Okay, so this GPA, right? It's in a sense very similar to your ECA in the sense that you are asked to do a valuation, right, of a company eventually. But I mean, the question can guide you to eventually go there. So for any of y'all who want a very good reference report, I would say Group Five I think did very well. So give yourself a pat on your back if you're Group Five. If you are generous and you like to share your hard work with others, you can share your report. Of course, I am not able to share it. But if your friend is in another group and you are from group five, if you like to share your report, please do so that your other group mates can learn. But yeah, I think your report was very good effort. Not to say the rest are not good. I think the rest are very good as well. However, I think for group five, you did really put in a lot of effort in terms of all the extra details, right? You can look at the announcement in our tutorial group. The when way back, when you are in kindergarten, in a sense, almost 12 weeks ago, when lesson one, after lesson one, we had a dynamic announcement on the groups. Okay. So, in case you're group five, you'd like to share, encourage you to do it. Um, of course, in your report, I believe that you only put what you have found out or what you have written. I believe there are a lot of Excel sheets that you have done. So those uh, are your, I would say, intellectual property, right? So maybe you want to share reports, but you still can keep your intellectual property because uh, yeah, you have put in a lot of effort. I can tell. Oh, yes, yes. Okay. Okay, so let's look at the first question. Okay, first question, right? This question generally is basically asking you to do a analysis of the environment. Environment meaning the macro environment, right? So appraise the Singapore investment destination against the heightened uncertainty in the global economy, indicates a suitable industry. So these two is basically just ask you to do like a analysis. Okay, so on this question, right, and I would say in general, okay, when you do, so I'm just going to specify generally, and you can apply this for your ECA as well, but generally, whenever you are asked to do any macro environment analysis, macroeconomic analysis, you should use a framework. Okay, so groups that use a framework generally score very well, right? However, if you do not use a framework, so what's the framework? Remember in lecture one, we talked about a lot of framework, and remember way back, within the first couple of hour, maybe half an hour to an hour, I will keep on talking about how this module is about equipping you with various tools and frameworks for qualitative analysis are also tools that you can use to do valuation, right? So I will put a star here for framework because for the qualitative side of things, I think it's very easy to, just let's say do a research on Google or ChatGPT, and then you get like information, right? But those information, while they might be relevant, might not be comprehensive enough where a framework will allow you to comprehensively uh, um, explain the macro environment, right? So when you talk about macro environment, please always use a framework because it gives you a comprehensive answer, and chances are very high chance you will score all the marks, right? Because I mean, this is not your first module in SUSS. You know that in a marking scheme, generally there are certain pointers that must be covered, right? So generally, a framework will help you cover all those pointers. So in this sense, you can use. I saw some groups use the pestle framework, um, which is good. And then some even use the Porter's framework as well, which is good. However, groups that did not use either or, you did not lose a lot of marks, of course, because your answers are still relevant, just that you might have lost some marks here and there. Any questions for this? Or qualitative? Maybe we can need not about this question, but generally about qualitative um, macro analysis, macroeconomic analysis. Any questions on it in general? Okay. Okay, on this point, maybe I just want to highlight something again. There is also, for at least for the qualitative side of things, there's no right or wrong answer. So it's really about more on uh, how your macro analysis support your recommendation. So it must be like argumentative, right? It must like try to convince you that okay, because of all this macro environment, this industry is a suitable industry to invest in, right? So it must be convincing in that sense, right? Uh, for part C, three companies. Okay, so this one, again, I want to emphasize again. So I think some of you also email me that whether the three companies need to be listed on the SGX. And the answer is no. Why? It's because if you take the example of SIA, right? If you want to analyze SIA, there's only one listed company on SGX SIA, right? There's nothing else. So you can compare it with other companies uh, that are listed on other stock exchanges. Um, and I want to highlight one thing, right? One of the group talk about companies as SGX. And SGX, yes, it's profit making, it's an exchange, right? Um, the good thing is I think you are very familiar with SGX and the various stock exchanges, the Hong Kong Stock Exchange. Yeah. But just be very careful. So yes, you are familiar with it and you did very well, so it's good. But SGX is not an easy company. It's not your traditional company. So, maybe for your group project, because you work as a group, very good dynamic, some of you are expert in this area, and you choose SGX as a company and you did very well, it's good. But in case you're doing your ECA alone, just be very careful because you might not be able to bounce ideas off each other, and then you might make mistake because SGX itself is unique, right? It's exchange market. um it's not going to be wrong. You are right. You are still going to get the full marks if you use SGX. It's just that it's tougher, right? uh okay, so there is no restrictions in doing so, um because I did not see any restrictions in that. Um, of course, at the end of the day, you know, not your first time in university as well, even for ECA, because I might not be a marker. So the person that mark your ECA might be someone else. So they might not know that you have done ECA, your Sheng in your GPA. But yeah, right. So your turning in cannot be you cannot be copy and paste, right? Your GPA answer into your ECA because your turning in plagiarism might be flat. And I'm highlight again, no, I might not be a marker. So it means that maybe other markers might be a bit stricter. Like, oh, there's 20% plagiarism flag, and then they flag your report as like a plagiarized work, even though you might have plagiarized your own work in a GPA, right? So don't put yourself at risk at doing so. If you want to use it, can, but please rephrase enough to the point that turn in cannot detect it. I'm not asking you to cheat. It's just, of course, the ECA requirements are different from your GPA, which we cannot really discuss about the requirements. But then just read the question carefully. Make sure that continue you continue answer the question in ECA rather than just copy and paste what you have done for your GPA, right? So you can use repeated, but I really encourage you to read the question carefully and not take it for granted. You just copy, maybe ask ChatGPT to rephrase for you and you just paste it there, right? Uh, Try to avoid doing that because you might um, mistaken the way the questions are being asked, uh, and you're not answering the question, you lose a lot of mark in that sense. So please still put in effort to read the question and know what they are asking. Any questions for the first part? So first part, more of qualitative. So any questions now, just more generally, any questions for qualitative analysis for general valuation questions? Okay, yeah. So just now I announced that the marks will be out before Sunday. So I already completed marking, which is why I mentioned Group 5 did very well. However, the thing is I cannot release it because the school has not approved the marks yet. So again, if you know, maybe I'm not sure when other lecturers tell you this, but I'm usually very transparent with you. It's like when I mark it, I cannot release until the school says it's approved and it can be released. Whether is it on their side they do some stuff or to match other class and all those things, right? So we need to wait for it to be approved. But I understand that it should be approved before Sunday. Then it will be released. Uh, yes, correct. I think class price 10%. Your class part also will be released before Sunday, so that by Sunday, which is we still give you some time to do your ECA. So by Sunday, you will have known your OCAS grade, and so like I mentioned earlier, you can strategically determine what grade you want and how much effort to put in for your ECA. What ratios? Okay, so we are talking about ratios, right? So let's go down to select in okay, appropriate financial ratios. Okay, this one. Okay, so in the GPA, right, and in most valuation, okay, in most valuation, right, general valuation, right, there is no fixed ratios that you must use. You must use only these five ratios. No, right? The thing about this question is, it's very important to look at the marks here. So if you are given 21 marks, ask you three companies and financial ratio, there is usually a requirement to write quite a bit. And I wouldn't be surprised for any other valuation reports that you do, you will need to do quite a bit. And when I say quite a bit, mean what? Financial ratios, recall lecture one, there is this table. Do you all remember lecture one? Do I have lecture one here? Uh, no, I don't have lecture one here. Let me just quickly download lecture one from the course. So remember all these analysis. Here. Can you see lecture one? Okay, so on this lecture, right, if you see a 21 mark kind of question, generally you will have to at least cover, liquidity ratio, profitability ratio, solvency ratio, and maybe this one not so important. Earnings ratio is your profitability ratio, so not so important. And then last but not least, your price ratio, right? Your price to market ratio. So your PE, those that we have covered in lecture six, right? Which is the last lecture that we did. So those are the important ratios to cover. Now, on this point, I also want to highlight something here. Because it's 21 mark, we need to have enough explanation of the ratios, right? So when you receive your script back, you might notice some comments to the extent that I mentioned, like, oh, you cannot just mention this ratio increase means profitability increase. This ratio decrease means that there's less debt. So this kind of analysis will not be enough. You will need to go into detail, right? In a sense, okay, our net profit margin has increased uh, over the 3 years because of what I don't know, maybe less expenses, right? So you need to look at the details in the financial statement and give comments. Okay, then the second point, right? So point one is you need to go to the details of FS, financial statement. Now, number two, I'd like to say that we need to do three companies, three codes, CO, plus I think one or two groups did 3 years. So you do this thing called a longitude, longitudinal analysis, meaning that you look at 3 years. And this is the right way to do it. So this is correct. This is very good. So three companies and 3 years, rather than uh, I think most group just did three companies with using the latest financial statement. So that is not so good because you are not able to determine what's the trend across time. So the best, even though this question did not ask about 3 years, generally in the market meaning in the industry, when you do valuation, when you do analysis of financial ratios, you typically need to do 3 years worth of yeah. Use five, that is even better. Yes, that's even better, right? But then this point is very important. So I highlight here details of financial statement. So if your write-up mentioned this ratio increase because of higher profit, maybe gross profit margin increase because of or gross profit margin is highest among the three companies, which is why this is the company we should choose. I think that's not enough. We need to look at the details of the financial statement because this is quite a bit of marks, 21 marks. So need to be careful on this one. And on this point, I think I want to highlight something also. The use of uh, FS, financial statement, or market intelligence, MIT, market intelligence tools. So some group, you don't even calculate, you just plug the figures from S&P Capital IQ and Refinitiv. That is totally fine as well. That's okay. And you put these figures in like a table and say it's extracted from Refinitiv, something like that. That's okay because nowadays in real life, right? In the industry, nobody is going to ask you to calculate these kind of things. The machine calculates for you. So to reflect that, you know, not really much mark is really given to the point of calculating ratios. That is probably in your level one module where the calculation of ratios gives you mark. But now in this module, we are really interested in your analysis of the ratio, right? Your write-up, maybe the three companies that you chose. On this point, also I want to highlight something. Please choose the right company. There is one group uh, that chose three companies, but they are actually from different industry. So if you do that, you unfortunately lose a lot of the marks. More than half of the marks is gone because you have chosen the wrong company. So please, I repeat again, please choose the right companies. You and use your Refinitiv or S&P Capital IQ or Bloomberg if you have Bloomberg to choose the right um, companies because that is very detrimental to you. Yeah, you can use Capital IQ. Yeah. So one example, right, I would say that is very tricky, and a few groups did this, as in they didn't do this mistake, but they have used, I think someone mentioned Sheng Siong, right? So I think a few groups did this like supermarket. So not all the groups did well when they choose this station type of industry. Okay, let me explain why. So this is more general, right? It's not relating to the GPA. But when let's think about Sheng right? Oh no, it's all free. Yes, all free. But you need to approach SUSS library. So as Capital IQ is free, you need to approach SUSS library. Okay, now going back to what I'm talking about for Sheng Siong. Okay, so Sheng Siong it seems a very popular company to choose. Now, there are groups that did very well with it, and there are groups that didn't do too well. Why? Let me explain to you. Because maybe once you get your script, you can still email me, I can reply, but it's easier that we discuss this. And again, if you have questions, you can look at your GPA now and you have questions, you can ask on the spot because that will clear the air and help you in your other assessments, right? Okay, going back to Sheng Siong. Sheng Siong is very tricky in the sense of what? So Sheng Siong is a retailer of grocery. So we are talking about downstream retailer, right? Meaning what? Is that your NTUC, Sheng or Dairy Farm. You know, Dairy Farm there. So I think Dairy Farm, do they own Sheng? I'm not too sure. But Dairy Farm or they own Cold Storage. But these are all downstream retailers, right? Selling you products. They are not your upstream producers. Okay, what does this mean? They are not the companies that grow your rice in the field. They're not a company that grow the barley or grow your veggie and then sell you the veggie from the farm to your supermarket. They are not the people that do that, right? They are the one that just procure and then they sell it to you. So when you do your industry, you need to be very clear. Oh, let me use this. You need to be very clear what are we talking about. So if your industry analysis is talking about farming, agriculture, grain procurement, so all these, if you talk about all these things, and then your company you chose is Sheng Siong, you are wrong. Why? Because Sheng Siong is a supermarket. They are not growing stuff. So your industrial analysis does not match the company really. Uh, any questions on this? This is very important, especially if you want to target or use like supermarket companies. Any questions? No. Okay. So if you're talking about grain companies, then you need to choose companies like I think some of your did like Wilmar. Olam. Okay, so those are trading, agriculture trading companies. Yeah, yeah. So those, uh, so what does FMCG represent? I just don't want to misinterpret the meaning of that. Fast food. Oh yes. Okay. Yeah, yeah, yeah. So yes, you can choose giant. Yeah, yeah. Yeah, right. So you can choose that. So you shouldn't be choosing, and of course, your industry analysis should link to the correct companies. So if you are talking about this kind of fast consumer goods, then your industry analysis must be talking about the fast consumer goods, right? How the market is, what the competitions, this kind of thing. I saw one group which did very well is that for their industry analysis, they actually did the what we cover in lecture, like I mentioned, they use a framework, but what I covered in lecture one, where is it? This thing. So they really yeah, so they did this five forces analysis and they replicated this model here. So if you use a framework when you do like so this will repeat again, it's very important to use a framework to do your qualitative analysis because it gives you structure, but not only that, by adding this kind of figures it gives you additional, not very additional bucks, but it gives your report a lot more weight, a lot more convincing argument to show to the reader that okay, you understand what's happening here, you're not just talking just doing a Google search on general kind of market analysis. Yes, you need, so I think, yes, you need to email the librarian to give you capital IQ access. Please do it now because the librarian, what I understand is the librarian need to email the service provider. Service provider will then give you an access via email link. So please do it soon. Yeah, please do it very soon because you need to submit your assignment soon. Um, I really encourage you to get it now because it's very important to help you in your GPA, not GPA, but your other assignments. Okay, going back to choosing a company, please choose the right company. So in an unfortunate situation where you chose wrong companies, um, unfortunately you will not be able to get the marks. Okay, so that's a good question. If you want to use banks, right? Uh, okay, when you use banks, I would say, okay, if you ask me, I would say avoid banking stocks because generally banking stocks are considered more traditional banking. They are not really fintech, like even your DBS, Maybank, Standard Chartered, they are more traditional banking. Uh, so if you want to talk about digital finance, you can, but then you need to choose other companies, not your DBS and this kind, because yes, they are going to fintech, but they are not like fintech players, right? So it becomes very hard to compare if you are talking about fintech industry. Um, but if you choose those companies like DBS and you talk about general banking industry, that's fine. Yeah. Okay, so I see a question. What do you mean I choose wrong company? Okay, so choose wrong company means what? Let's say I talk about the fast consumer goods company like Sheng Fair Price. So let's say I choose Sheng Fair Price, and Wilmar. So those of y'all who know what's Wilmar, Wilmar is a one of the largest traders of grains and agriculture products. So yes, Wilmar is in like almost like a consumer kind of industry, but they are in a totally different segment in the sense that they are more like a middleman, right? They are not the downstream retailers like Sheng and NTUC or Fair Price. They are like the intermediate traders. So if you choose Wilmar, Fair Price, and Sheng, you have chosen the wrong company. Wilmar is the wrong company. Fair Price, not. So yeah, you can't. Japan food is fine. DFI, what's DFI? Sorry. Yeah, Dairy Farm Group. Yeah, that's fine. Yeah, Dairy Farm Group is okay. Yeah. So, like I mentioned, it need not be all in Singapore as well. But just please take note that your company must link to your industry. Yeah. The telco is good also because telco companies are quite simple to analyze because there's not much uh, um, in parts about telco because telco is telco, right? So you can talk about Singtel, no, Singtel, StarHub. I'm not sure M1 is listed. I think M1 is listed, right? So Singtel, StarHub, and M1. Maybe if you do that, yeah, then it's quite easy already because it's all in Singapore as well. I saw somebody saying REITs. You can do REITs as well, but REITs again, they are not really companies per se. They are real estate investment trusts. So when we look at REITs, we need to look at cash flow from dividend upstreaming from the properties. We look at the lease period of the lease of the properties on estates. So it might be a bit tricky to do REITs. Um, M1 went private. Oh, okay. I didn't realize that. But okay, yeah. So maybe you cannot use M1, but you can use I think Thailand has one company that's quite popular. I think it's a Thailand telco or something. Or even Indonesia has one telco. You can use that too. What about real estate? Real estate can also, yeah, you can use real estate. But just caution on real estate is that if you look at financial statement, it can be a bit complex. But it shouldn't stop you from using it. So real estate, you can go like city development, that kind. Yeah, you can. Yeah. So yeah, so so the thing about market intelligence too, right? Whether is it Refinitiv or Capital IQ, is that generally they have a peer analysis section. So when you do the search, right, for let's say SIA, they have a peer analysis section to tell you what are their peers. And so you can just use the whatever they recommend. You need not reinvent the wheel because they have already tell you what is it. So you just need to look at what the ratios you put in and all. So that's why I really recommend you to use those tools um, to assist your write-up rather than sometimes even if you use ChatGPT, right? What are the industry peers? They might actually give you wrong answers. So just be careful. But if you use a market intelligence tool, for sure, it's better. People, many analysts look at it. So chances are it's on the right track. Maybe other questions? Okay, three companies financial. Okay, so I can't answer quite a bit of details on this. So if you have any questions, feel free to put them in the group chat. We can have a discussion on it. Okay, question. Okay, wait. Final questions. Any question on question? Any comments or further clarification for question one in terms of? I think it's more the qualitative, the ratio analysis, and how we choose companies. Any more questions? Okay, I guess you can still ask questions and even though we are at question two. Okay, so question two, Now this question, right? The focus is on the calculations. Okay. Now there are it really depends on how much effort you want to put in, I feel, when you do question two. Because you can go into super a lot of details, or you can just take the figures from Refinity. Now, the thing is, both are correct. However, um, as you probably already know, most of the time, the markers, it can be other markers, not me, right? They generally mark based on comparison. Right? Let's say, just hypothetically, we have a group or individual that did, let's say, the what what should we do? Design and cash flow. Okay, this design and discounted cash flow value. Okay, let's say you use the free cash flow, FCFF, right? So generally markers marked by comparison in the sense if you have one group that I would say, you might say spoil market in the sense that do a lot of detail in terms of FCFF. For example, put down what assumptions used, the tax rate, then you calculate, you do a regression on the beta. So I know a couple of groups regress the market returns to stock returns to determine beta to verify that the beta in your market intelligence tool is accurate. So if you do this kind of additional steps, I would say that while it might not be uh, a must to do, but because you have done it, you have placed yourself, you have kind of spoiled the market in a sense, because the market saw this, and then they will say, oh wow, this group deserves an A plus for this answer. However, anyone that didn't do it maybe still deserve an A or maybe A minus, something like that, right? So it's a bit uh, like have anyone taken prisoner's dilemma in your economic class, prisoner's dilemma? Yes. Yes, game theory, yeah, correct. So the thing is, if everyone do something together, of course, everyone benefits. But there's always going to be one person that wants to do better, which is normal. I'm not blaming anyone that wants to do better. But because of that, then there's going to be someone that's going to lose out if the other person doesn't do as well, right? Is game theory, right? So it's an economic concept, of course, and it plays out in real life. Then we have agreement. Yeah. So in this sense, right, even for your own personal assignment, it's the same thing, right? So groups that have put in a lot of effort for GPA, typically they use the same framework to do to it for your ECA as well. Okay, so if you do have issues getting S&P Capital IQ or Refinitiv, because you are not a full-time student, etc., uh, drop me an email. I will try to help you as soon as possible, of course. I will direct your email to the school admin, see whether they can grant you access to Refinitiv or something. Because it will really help you, right? So do drop me an email, yeah, if you do have issues, and as soon as possible, because the school also might take some time to grant you access. Uh, or if not, if you have friends, because now you make friends in your group, right? So you have friends in your GBA group that have access to it. Maybe you guys can share, right? It's just a platform. You can use it. You can share. It's okay to. Yeah. That's the fastest way to get access to it. You can just ask your friends for the access. Okay, so going back to this, right? Because this question is 17, 20 marks, which is quite a bit. So groups that do a lot of details in terms of, like um, show where your figures are from, do all the extra steps in terms of like uh, the calculation, the projection, etc. Generally, you would have done well, very well, compared to maybe if you more of like let's say just extract, let's say I choose the beta from S&P Capital IQ and then use the beta there. That's fine. I don't think it's wrong, but like mentioned, it's about prisoner's dilemma. One thing that I want to highlight to you is that so I had this question also. One of individual emailed me. This is going back to more accounting. So impairment losses are real losses. Okay, so I repeat again, impairment losses are real losses, meaning that they are not accounting concepts. So depreciation is an accounting concept, but impairment, there's actually a real impairment of your asset. Meaning that if your asset is impaired by $10, if I'm going to sell the asset immediately today, I'm really going to make $10 less. There's a real impairment, right? So impairment is real, it's not a fake thing. Unlike depreciation, which is like non-cash, da da da. So just be careful that impairment losses, they are considered expenses, and so we should not really adjust for impairment, right? Again, I try to emphasize this, like in the lesson, we also talk about, the type of tax rate to use. Remember, we talk about how we should use the effective tax rate. I highlighted to you that we should go to the 90 case to understand it. So, in a similar sense, given that this is Mark, so groups that went to the whole justification. So of why you use a tax rate, let's say 17% or 18%, by writing some sentence to justify your answer, this will give you the full marks, right? In other words, right, let's say you just assume that you just did calculations and you just assume 17% tax rate, okay, then you use 70% calculate, but you do not mention any comments in terms of why you 17, why not 18, why not 19, right? If you do not put some qualitative justification, unfortunately, you will lose quite a bit of marks here. Maybe you not lose half marks, maybe you lose 5 marks here because you for these kind of questions, right? For valuation, whether is it for this GBA or generally, any valuation that you do, you need to provide justification on why you use 17%, why not 18%. And in this is similar sense for almost any kind of comments that you want to make. Why do you want to remove uh, impairment, let's say, if you feel that it should be removed, right? So just be careful. It is good that you can know how to calculate everything, but if you calculate everything without justifying why you use certain values, um, it you will not be able to get a full marks. For example, another example is let's say you want to calculate uh, net working capital, right? Net working capital is CA minus CL. Okay, that's the accounting way. If you want to use the finance way, you can say, okay, we are going to use the finance way, which is not CA minus CL, but we are just going to focus on for your CA, your accounts receivable, inventory, and cash. Let's say cash. Or sometimes you move cash, you don't even consider cash, right? Let's say accounts receivable and inventory. And you just say this is kind of your justification why you only select the numbers for inventory and receivable. and why you omit cash or you omit other things like short-term loans, right? So these are your justifications which you should include as you go along, rather than just putting random numbers which you plug from the balance sheet and putting them in an Excel, and then you just copy and paste the Excel without any description of why you're using these numbers. Both are fine, but you just need to mention what method you're using. You justify your answer. Both methods are fine. So, like for example, the finance method, you can say that, oh, we are going to be a bit stricter in terms of determining what is net worth capital by focusing only on operating current assets and operating current liabilities, and this relates to, based on the balance sheet, relates to inventory, relates to accounts receivable, or on the liability side relates to payables, accounts payables, and maybe some leases. Let's say if it's relating to certain companies that consider leases as operating. Actually, leases most of the time is considered debt. So maybe not leases, but accruals. Let's say accruals. So this, what I mentioned earlier, is like your justification of why you use those things, and this is the important part, right? So if you were just pick the numbers, even though you pick the right numbers, let's say you pick the accounts receivable numbers, you pick the accounts uh, payables numbers, you pick the inventory numbers, you pick the accruals numbers, all are correct. But when compared with another group that has justification, because there are marks that are usually allocated to this justification, then you will not be able to get the full marks. Any questions on this? This is very important. The justification part is very important. You need to provide substantiation, and it's not enough to just like a mathematics kind of problem, just all the numbers here and there, and then you just give a final answer of this amount of cash flow. If you do that, unfortunately, you will not be able to get the full marks. And I do have someone posted to me what's the best way to present. So I think what I've seen so far, the easiest for markers to follow is that you screenshot the financial statement and you paste it as you do the calculation. So you paste the screenshot financial statement, then you do the calculations below. Like, okay, you screenshot financial statement, you say, okay, total short-term debt equals to this plus this, right? Equals to that. Total long-term debt is this together. By doing like that, the marker can easily see where your numbers are coming from the, let's say, the balance sheet, and we're able to award you the marks, right? So of course, easier you make it for the marker, generally you are usually being awarded more marks in general. Okay. For all your analysis, one more thing is that you should be focusing on using the group financial statements instead of company financial statements. So for for some, you choose a company that has presentation of both the group and the company financials. Always choose the group because you want a consolidated view of your company, not just the company view. Do you have any questions as of now? No questions, I guess. Okay. Uh, okay, we have talked quite a bit on the quantitative side of things. Um, we also talk about the beta. I told you that some groups need the regression of the beta. So that one, if you've done it, it's very good. You generally get more marks. Oh, then remember in the 90 case, there's this example of the Damodaran use of the default risk premium, market risk premium in the calculation. So for groups that actually done that, you basically get most of the time the full marks. Um, even if you don't use that, like I mentioned, it's also a bit on the prisoner's dilemma game theory, right? A marker is going to say, hey, okay, you are being taught about this. This group have done it. How come you're not using it in your analysis, right? So I know there are some groups that did additional like analysis that is out of the syllabus. Those, of course, the markers do not expect, but anything that's covered within the syllabus, if you really are striving to get the 90 percentile, really like the almost the highest marks, then you will really need to add in those details that is being covered. Any questions for now? So in case you feel like your report your GPA report is a bit lacking, do not be discouraged, I would say. First of all, what you can do is refer to the 90 case. The 90 case gives a good backbone in terms of what you should be including in your report. But not only that, maybe try to reach out to other members, see if they are kind enough to share their report with you. And of course, maybe don't expect them to share their Excel sheet where they do all the calculations, but at least with the report, you can kind of have a good gauge in terms of what is uh, a very good report, right? And on that note, I kind of also want to stress that if they are nice enough to share with you, also do not uh, pressurize it because like what mentioned that you can actually just copy and use the same company, but at the same time, you might be flagged as well. So just be a bit tactful that they are nice to share with you and then use it maybe for a different company, if I put it that way. Okay. So I'm just going to pause here because that is really all that I want to like discuss in terms of the GPA. But if you notice, it's really just on an overview of what we have talked about in terms of valuation, what's important in terms of valuation, how do we tackle now a question asking you to value a company, um, and determine things like how to score the full marks, let's say using frameworks, let's say putting in that additional effort. So any other questions? No. Okay. So if you do have any questions, still available. You can drop me an email. Uh, Again, I mentioned, of course, I will not be able to reply any specific questions relating to ECA. like how what's this question asking, or should I include this in part A of this question? Unfortunately, I can't. But if it's a general question relating to valuation, I'm really happy to see and explain to you what's the understanding of what you need to include for general valuation question. Final thoughts? We might end a little early today, but any final thoughts, any concluding remarks? Um, did we- yes, I'm very proud of actually everyone for even taking this module, especially uh, yes, reply, especially fast email reply. Yeah, maybe it's a bit bad. Uh, because being addicted to emails is like being addicted to TikTok. Oh, oh. Yeah, but some of them are so maybe they don't check their email that often. Yeah, so maybe as we come to an end of this lesson or this module, want to say thank you for your attendance. I know most of you all try to attend. While sometimes because of work and stuff can't attend, that's fine. Don't worry about, like, I would say, your, let's say, even your OCAS, right? Let's say your GPA, you feel that you didn't achieve what you really wanted to, do not be discouraged. I would say, at the end of the day, because your OCAS is 50% of your grades, you can still really um, pull your grades up by working extra hard for your ECA, right? Which is why, again, I want to say that we will try to release all your grades for your OCAS by Sunday, so it gives you a good indication of how you can moderate your grades or moderate efforts for your ECA. And it was a pleasure to take you through this course. At the start, I'll say that it's a bit heavy, right? There's a lot of frameworks, but as you can see, as we proceed towards the end, it's a bit more lighter, a bit more repetition, but it's usually that's the case. The first few lectures are a bit heavier because also there is the TMA, which we need to cover the content, so it's a bit heavier. But yeah, it was a pleasure taking you through this course. Hopefully, I know for some of you all, I've already taken you through a second module. Maybe, who knows, it might be a third module next semester in case you're taking another finance module. And yeah, thanks for attending lesson, being very participative. Um, and so, if you have been very participative in lesson, don't worry about your class part. You'll likely either get the full marks or close to full marks, right? So, yeah, thank you so much. Let me just pause the recording. I think that's all I want to say.